That's probably why we have pretty low show in this people. But today we're going to have a discussion about Japanese entrepreneurship and the overall environment of entrepreneurship in Japan. And Kenny will introduce the speaker.
Hi, my name is Kenny. I'm one of the Frost interns in the Speakers Series Division of ACES. And so here's just a brief introduction of Mr. Robert Eberhart. It's actually pretty long introduction. Sorry, he's done a lot of stuff. So Mr. Robert Eberhart is a fellow of Stanford's program on Regions of Innovation and Entrepreneurship, where he leads the Stanford Project on Japanese entrepreneurship. His research focuses on comparative corporate governance, with special emphasis on Japan and the role of Japanese institutions in fostering entrepreneurship. From 1999 to 2007, he served as CEO of Wine & Style, a venture capital-funded startup company in Japan that developed a solution that radically shortened the supply chain for wine distribution in the country. Mr. Eberhart is also a partner at the San Francisco-based private investment firm, where he is responsible for initiating, closing, and managing a portfolio of investments in Japan and U.S. ventures. He was previously president of the Japan subsidiary of Plantronics, Inc., and he held manufacturing management positions at Applied Materials Corporation and Performance Semiconductor Corporation, where he led the team that manufactured the world's first R4000 RISC chip. So without further ado, let's welcome Mr. Eberhart.
Hi. Oh, you're too kind. What a loud. You know, there's not a whole lot of people here, so we'll be kind of relaxed today. At least I'm going to be. You don't have to be. And if you need to pop out for a beer or something, it's all right. Or a glass of wine would be better for me. Yeah, I did a lot of things, and one of the things I did was start a company in Japan. We're going to talk about that a little bit, because there are not too many Americans who started companies in Japan. And I know because I would have been friends with them, and I didn't have many friends. And they just weren't a lot of them over there. I'm, by the way, the first foreigner ever to receive a liquor license from the Japanese government. So I'm very, very proud of that. I run a program at Stanford called the Stanford Program on Japanese Entrepreneurship. It's a group of scholars here and at the University of Tokyo, and we are writing books and journals to create a new sense of the paradigm of what's going on in Japan. And that's part of kind of what you're going to see here today. This was my company. I just want to introduce it. It was called Wine & Style. It still is called Wine & Style. It's still there. It's trying to go public. It was supposed to go public this year, but you know. It's currently Japan's largest independent importer and distributor of California wines. And we used an interesting business innovation model. This is just my favorite ad that we designed early on, but I liked it. This is what we did. This was our secret sauce. This is what the Japanese distribution system for wine looks like. This comes out of a government document to tell people how to import wine in Japan. We just copied it and everything else. We had a different idea. We decided that instead of having all steps, let's have just 3 steps. Let's go to a winery, let's buy some wine, let's sell it to a customer. That's our total system. The result is we basically owned the entire supply chain. And what we did is we captured margin. Everyone else here is taking little 5% pieces. We decided let's put those all into one big piece and let's keep it. And so we were actually selling wine under the market price and having the biggest margins in the market. So we grew pretty well over a number of years. I sold my shares of the company a couple of years ago because I was tired. One of the things people don't really know is that there are a lot of startups in Japan. This is just a few of them. I just grabbed off the internet real quick. Some of them are quite significant, but for some reason Japan doesn't get the opinion, give the impression to people that there are a lot of interesting startups going on. I think everybody's heard of SoftBank. If you haven't, you should. But this is a classic startup. Value Commerce was started by some New Zealanders, friends of mine, became the largest internet affiliate advertising site. If you have been in Japan, you've heard of Rakuten. Rakuten is an immense internet mall selling all kinds of things. Over the head, the founder of that Harvard-educated MBA named Mikitani had a great idea. He thought if he could get 1,000 companies to give him $500 a month to put their products on an internet mall, he would make a lot of money. He got 2,000 companies, and yes, indeed, became extremely wealthy and inaccessible. Mixie is a fantastic social entrepreneurship stuff. This is what my old company is now called, by the way, online, iWine.gp. But there's all kinds of things. Cybird is a successful company making software for cell phones. Aka Networks is an ADSL company. Lots and lots of startups. In fact, I couldn't go through them. But you don't get the perception, certainly in Stanford or much of the United States, that there's a lot of entrepreneurship going on there. So really, Japan? Well, it's the world's second largest economy. You can't see it well here, but it's here, after the United States. The United States does tend to dominate this picture, for sure. On a per capita basis, Japan is about here, the United States being here, and we put China here by comparison. In terms of per capita income, it's a large, wealthy market. Why not do business there? The rate of entrepreneurship there is pretty moderate. Best way to put it, it's similar to these countries. Even though if you just went around and started pushing people around and saying, what do you think about Japan in terms of entrepreneurship? They say, I don't know, not very good, I guess. It's kind of average. It's European in character. This is a chart from a study out of Babson College, something called the Global Entrepreneurship Monitor, or GEM. And well, I'm not sure I agree entirely with the way they do things. This is an interesting chart. This is on this axis here. I wonder if I can focus that any better. I can't read it. A little better. On the x-axis here, we have the per capita income of a country. And here we've got the percent of people that are doing entrepreneurial things, starting companies and that kind of stuff. And, oh my God, the MacBook's trying to save its battery. You can find there's a lot of things that are outliers. Like out here, this here is the United States. Okay, way out here, kind of a little bit above average. There's a great many people here in the high levels, but at very low incomes. And China is here, Thailand, that kind of thing. And this is the presence of very small, what we call entrepreneurship out of necessity. You go out and sell noodles from a cart or something because otherwise you don't eat. That kind of thing. Rather than, this kind of entrepreneurship is more entrepreneurship of building companies and doing that, for value and that kind of thing. And the mixing the two is why I don't like the methods. Japan is, it's hard to tell, but it's right about here. Right here, there it is. And it's right around, these countries. It's European in character. It's got a pretty high income. It's got a moderate level of entrepreneurship. Not zero anyway. What we did is we wanted to look at the entrepreneurial habitat in Japan. In other words, what's it like to be an entrepreneur there? Are the necessary things to be an entrepreneur in place? To use that, we looked at the entrepreneurship, the habitat I'm sure developed by a couple of professors here at Stanford, and published in a neat book, which is The Silicon Valley Edge, which describes the Silicon Valley. And it was evaluated by a number of scholars in our project. And we wanted to look at each entrepreneurship dimension and compare how Japan was doing in 1998 before a bunch of legal reforms, look at the reforms and see how they did. So just kind of as a look, the first dimension is the rational rule of law. Entrepreneurs can't be entrepreneurs. They can't and won't invest the money to be an entrepreneur if they're not going to own their products afterwards. Somebody can just take it capriciously, tax them capriciously out of existence. If laws exist that don't allow them to get licenses and everything else, entrepreneurs just don't exist. We all sat down, maybe, 2 or 3 of us, several of us rated Japan as red in this, red being low in 1998. Well, we're going to rate it 3 ways, red, yellow, and green, just to be strange. But anyway, it was red in this. And the reason for the red, more than anything else, in 1998, Japan had very poor corporate governance structures and very poor transparency structures. And an investor and an entrepreneur has to have transparency. In the United States, everybody understands